Hi, it's Peter Temple, and this is the market report for Monday, June the 15th. Well, I'm going to start off with the big picture at the New York Stock Exchange, which is the largest cap index in the world, and of course the S&P and Dow are subsets of this. So this is telling us where things are going, and I know that the S&P and the Dow and all the smaller indexes that are part of the New York Stock Exchange are going to go in the same direction, and as well the Nasdaq. So this is why I'm starting exactly at the big picture here, which we had, of course, the top in May of last year. We've had a first wave down, which I have contended for a very long time, and we have had this what I thought was a truncation here, but somewhere in the middle. I'm not exactly sure where. It was pretty obvious, probably at the 62% retrace level. It was obvious we were going up to a second wave here. Three waves down. We've had three waves up, an A, B, C up to the top here, and we've actually topped at the top. So we're at the top of two as far as I'm concerned, and we're just going to finish up, I think, in the next 3 days, 4 days. It could take a little bit longer, but I'm looking at the 15th, 16th for a turnover. Let's go look at the S&P and see what it's doing, and we'll also jump in a little tighter to look at the pattern that we're dealing with right now. Here we are looking at a 4-hour chart of the S&P 500. So again, big picture here. We're seeing the double-pronged second wave. We zoomed in that far. We can see we've had an A, B, C down. A, B, C, three waves, always retrace. And of course, we've had another A, B, C up here. And the A, B, C is because this first wave had no second wave. We had a fourth wave, so this makes this three. And I said right from the start, this wave is going to come back down. We're not going to a new high. And one of the things that I've come to realize in all my days of trading, the S&P is close to a new high, but if it goes to a new high, everything has to go to a new high, and that's the way it's always happened as long as I've been around in the market, certainly. So I don't see the S&P going to a new high. I think we are simply going to retrace up to the top here and head back down, and I'll talk about this pattern. But you can see that we have made the 2116 previous high, and we've exceeded it slightly, and I'm expecting us to go back up and probably do a double top. Either do a double top, or I believe this is an ending diagonal of some type. There's two different kinds. I'm going to look at that with you just here in a minute, but we'll at least go up. We came down in three waves, and I'll show you that when we zoom in, and we're going to go back up here to the top, and so we will be expecting a turnover and a very large third wave down, and so this is imminent. Here we are zoomed into a 15-minute chart of the S&P 500, and this is our final wave up. You can call it a fifth wave. I'm calling it a C wave here because it is in three waves, a big A, B, C, and you can see there's a lot of the internal waves here are all in threes. They're all overlapping. There's certainly no fives in here at all that I can see. So this is very much a wave, probably a first wave leading into an ending diagonal, which is what I've been saying. And an ending diagonal has a shape that looks like this. So it's very much a triangle, but it will go to another new high as a third wave, down to a smaller fourth, overlapping the first, of course, or the second rather, and then up into a fifth wave top. It's going to get, I would suggest that it's going to get very close to a new high, but it shouldn't get to a new high, so it may just be within ticks of it. We'll have to see what happens, because then if it gets to a new high, as I mentioned, I would expect everything else to go to a new high. So this would end up as a triangular, and it may take only a few days to get up there. We'll have to see what happens. I've actually put in a Fibonacci retracement tool here just to show where I believe it's going to fall to, and it looks like it's doing that tonight in the ES, the S&P futures. I think it will fall back down here to 2084, which will make this a second wave. It'll probably go just below this previous, these two, we'll call these two fourth waves here, and that will make this a two. So it looks like a converging ending diagonal, not an expanding to me right now, unless it was to go down a couple of other notches and then head way back up. And expanding would look very much like this, going up to a top I think it's going to be a converging ending diagonal, and that should be it all over. So I'm going to all over for the second wave. So I'm going to take a look at currencies now, and then we'll move into a couple of other sort of target charts. Let's look at gold and oil. Here's the daily chart for XGLD gold, and it has been slowly fulfilling the prediction that I put out quite some time ago. We've done 5 waves up here. This would actually be an A wave, expecting a B wave down to here in 3 waves. And then we're going to head up to about 1600, I believe the number is, on the high side. Yes, about 15, just under 1600, and that would be a larger B wave, but we'll get to that a little bit later on as we get a little bit closer to it. So right now I'm expecting this wave, which is now retraced 72% or 76% rather, in the Fibonacci retracement tool, to head back down to a C wave here and then head back up. I would think this would happen as the US indices go up to a final top, and then as they head down we'll see gold turn up again. But there haven't been any surprises here for gold in months. It's done exactly what we expected it to do. Here's a daily chart of oil, and we're in the final wave now, or the final sequence of waves. This pattern here, we're not sure exactly. I think it's going to go up and do a flat, but we've had 1, 2, a very large 3, and it really depends on what this wave here does. It's obviously a wave in 3. You can see that, A, B, C. At the moment, the C wave is the same length as the A wave, so it could turn here at 52.67 or around this area. I would expect it would head up again at the very least to do sort of a double top in here, but we're definitely coming down. Then if we were to look at it, it could also go up to this previous high here, the previous 4th wave, and do a flat. And this wave, then the C wave, would be 1.618 times the A wave. So those are the 2 options. It either turns now just around this area of $52 or $53, or it's going to go up to $62. But we have not seen the bottom of oil yet, and I'm fully expecting we're going to see $15 oil before this is all over. Can't give you any idea of timing, but that's my take on oil. Here is a daily chart of the euro, and this picks up on where we were last week. We're in a triangle, and this should be the final pattern here before we head down on a very large 5th wave. This is the 38% retrace from the very large wave down from last year, and we have been in this counter trend move going sideways now for almost a year, or more than a year actually. So we're expecting this wave to go up and finish this E leg of this triangle. We've got an A up here, B, C, D. I had thought the triangle was going to be wider than this, but we had last Friday, Friday before last, we had the labor report, which headed up here quite unexpectedly. I was expecting it to head down. It did a B wave and then it stayed there, and I was expecting it to come back down and finish this larger triangle, but it doesn't look now like it's going to. We've got another B wave down here, which I think is going to head back up and finish off the E wave as the US markets finish off their topping process. If we go down any further than this B wave here, then I would widen up the triangle. But if this turns, and it seems to me that's what's going to happen, we're going to turn up probably tomorrow or the next day and finish off the E wave, and then we will head back down here into a big 5th wave. It's been all the same markets, which is something that Bob Prechter came up with a long time ago. You will find, and I've been noting this for 8 to 10 months now, that all of the currencies are moving in tandem with the US equities, and so I'm expecting to see absolutely everything turn all at the same time when we have this gigantic 3rd wave. And it's all due to deleveraging of debt internationally. All the markets are moving together. We'll take a look very quickly at the Canadian dollar and US dollar. Here's my last video chart for tonight. This is the US dollar and Canadian dollar. This is a 4-hour chart. we have had a very large wave down here in this currency pair, and it ended up with an ending diagonal. So I am looking at this wave going back to do a double bottom here. Now, I had thought this wave, and most of the time what you'll find will happen based on a Fibonacci retracement tool, is that you will get a wave that will extend 1.68 the length of the A wave, which would take us from, if this was our A wave, would have taken us to here, but we truncated. And you don't actually truncate, I'm using that word really improperly, but it did a much shorter wave than I expected. We came up here and did a first wave, and it went to a 62% retrace, which was a trade that I took. It did what ended up being a triangle here, but then we had a failure right after it started to head up. And this is the labor report from a week ago Friday, this wave down here, and it really turned the entire market around, that labor report. So it was quite extraordinary. And now we're doing what we've ended up with is a first wave here, a second wave, obviously a very large third wave here, a fourth wave, which I said on Thursday, Friday would head up to the 38% level here, which it is doing. It may not make it exactly to 38%, which is 1.28633. Internal waves tell me that it may only go to 1.28256. I will post this chart. And then we will turn around and head back down to this double bottom here. So there'll be a good trade here when it finally tops in this little area here, and you'll be able to take this down to a double bottom. And that should happen as the last wave goes up in the US market, US equities, because again, these are all turning and moving in tandem with the US equities. So this market is a very balanced market. It's a very dangerous trading market. If you're going to get involved in the market, make sure that you put in your stops and adhere to them. I'm looking at this whole market and the the counter trend that we've been in, finishing up, I think this week, but certainly in the next 2 weeks. We also have Brexit on June the 23rd. So good trading.